The Australian dollar remained within the 78 to 80 cent range this week, but traded mostly above the 79 cent mark. There was a lot of news to absorb, most of it from offshore. US focus, of course, has been on Hurricane Harvey. Beyond the heavy human toll, the economic impact is going to include extra fiscal spending on emergency relief and then reconstruction. Shorter term, there's already been an increase in gasoline prices given that so many oil refineries are located near Houston. The impact on crude oil, however, has been more muted. On Wednesday, the Australian dollar fell as news hit that North Korea had fired a missile over the Japanese island of Hokkaido and within Japanese airspace. This was an unexpected escalation that rattled markets. However, nerves gradually calmed over the course of the day as there was no sharp response from the US, and in particular, we didn't get a repeat of President Trump's fire and fury threat of military action. Still on international news, the Australian dollar rose above $1.10 New Zealand this week to highs last seen in April 2016. Support from Australian commodity prices has helped, with iron ore back to about $79 a tonne and sharp rises in recent weeks from metals prices including zinc and nickel. But along with Aussie dollar strength, there's also been some Kiwi selling which seems to be linked to political uncertainty ahead of the 23rd of September election. Labor's new leader Jacinda Ardern has proved very popular with voters, with their share of the vote rising to a 10-year high, which has left opinion polls very close to tied. After an extended quiet period, Australia's data calendar has become very busy. This week we saw a somewhat confusing construction survey, but a quite encouraging investment survey. On construction, the 9.3% quarterly gain was the largest on record, which does raise eyebrows. The suspicion is that the 56% increase in engineering construction in Western Australia is actually overwhelmingly due to a single vessel imported from South Korea. This is an enormous floating liquefied natural gas vessel that will process LNG off West Australia's coast. Given that this vessel was actually made in South Korea, it's likely to show up as an import in Australia's GDP data. More encouraging, though, was the investment report, which showed that capital expenditure on plant and equipment in the second quarter posted a healthy gain. That lends support to GDP, which is due out next Wednesday. There was also encouragement in that survey in investment expectations for 2017-18, which showed a sharp rise in planned investment in the services sector. This survey in particular will be welcomed by the RBA, which meets on Tuesday. Rates are extremely likely to be held at 1.5%, but the statement may well be a little bit more upbeat. Along with the RBA statement on Tuesday, Australia's busy calendar next week includes July readings on retail sales, the trade balance and housing finance approvals. But obviously the main focus will be on Wednesday's GDP report. Westpac is looking for a rise of 0.7% in the quarter, which is a pretty decent outcome and a lot stronger than the first quarter. Over the year, though, the rate is only likely to be about 1.7%. Globally next week, the US will be a little bit quieter with the Labor Day holiday on Monday, while the focus in Europe will obviously be on the ECB meeting on Thursday. It sounds as though they're going to take a cautious approach to reducing monetary stimulus. We also have a policy meeting from the Bank of Canada where it's possible that they will deliver a surprise rate hike. All of this is likely to see the Australian dollar trading ranges push a little bit higher overall to say 78.5 up to 80.5 on the top side. We'll speak to you next week.